Hello, everyone. Welcome to today's webinar. My name is Khalil Doheny, and I'm Director of Content at Digital Niche Agency. Today, we have Cole Bueller from Pinon Hill. Cole, how are you doing?
I'm doing great today. How are you doing?
Doing great. Where are you tuning in from right now?
I am actually in Toronto currently.
Yeah, how's the weather out there?
It's all right. It's looking okay. It's kind of like I can't tell if it's going to snow right now, but it looks like it might. So hopefully not.
Nice. And whoever's attending the webinar today, let us know where you're tuning in from. I'm currently from LA. It's not snowing, but drive a couple hours, go to Big Bear, and there'll be some snow out there. Um, Awesome. Excited for today's discussion. Cole has a presentation that he's going to go through, and then hopefully at the end we'll have some time for Q&A. But Cole, while people are trickling in, do you want to just give a quick background of yourself and really just kind of lay out the land for today's webinar?
Yeah, definitely. So today we're going to be going over some of the details in terms of how Pinon Hill Capital operates. We're going to go over how our investment is currently structured. So we have a opportunity available for everybody today. So we're going to be going over details with that. And a little bit about my background. So, as we were saying, my name is Cole Bueller. I am one of the directors here of the capital markets. So, a little bit about my background. I have been working in the finance and investment space quite a few years now. I would say I started that journey off just in my studies. I studied at the University of Colorado in Boulder. Hopefully, everybody knows where that is, but really good school, studied finance there. And then after that, I worked in finance at a large loan creditor. At that company, I managed a large loan portfolio and I helped out with different financing solutions. Now I'm working with Pinon Hill Capital. I'm helping out with different raising efforts, and then I'm helping out with acquisitions as well.
Awesome. And let's just dive straight into it. If you want to just go ahead and share your screen, and we can go in with the presentation.
Oh, yeah, sure.
Perfect.
We can get everything going now.
Yeah, and if
Uh,
anyone in the audience has a
okay.
question throughout the webinar, please drop them in that Q&A chat box. We're going to have some time at the end for some Q&A.
Okay, perfect. Awesome. Is that screen share coming out in okay?
I am not seeing your screen.
Okay, give me one sec.
There we go. Perfect.
Yeah,
No,
perfect.
yep.
All right, awesome. Well, let's get everything started here. So, as I was saying, my name is Cole Bueller. I am one of the directors here of the capital markets at Pinon Hill Capital. So, before we get everything going, I do want to let everybody know this is a accredited only offering. So, what that means is you can either qualify through net worth or through income. So, if you are qualifying by net worth, it means you must have a net worth of at least a million plus, and that's not including your primary residence. And if you're going based on income, if you're single, then it has to be over 200,000 per year. If you're married, then it has to be 300,000 plus. So if you are qualifying by net worth, it can be joint net worth if you're married. And so you can use anything from rental properties, vacation properties, retirement accounts, bank accounts, essentially just anything of value, just not including that primary residence. So now that we got that out of the way, let's kind of get into some of the details with the presentation here. So as I kind of mentioned this already, but a little bit about my background. I've been working in the finance and investment space for quite a few years now. I started that journey off at the University of Colorado at Boulder, where I studied finance. And then from there, I worked at a large loan creditor. And at that company, I managed a large loan portfolio and I helped out with different financing solutions. Now with Pinon Hill Capital, I've been helping out with raising efforts and also helping out with acquisitions. So as we were saying, we will have a general Q&A section at the end of this presentation. So if questions come up, just feel free to let us know. And if maybe we don't have time to answer your question or anything like that, I can also provide my phone number as well as email, and we can always connect that way if that's easier as well. All right, so what does Pinon Hill Capital do? So first off, we are a business acquisition company. We're mainly targeting companies in the e-commerce space. So that's both Amazon as well as non-Amazon stores. We are here to make a lot of money, but we also recognize that we have a large fiduciary responsibility to our investors. And with that being said, we primarily operate under two main values, and those are profitability as well as safety. But with that, I would say safety is probably the most important value for us because we want to ensure that we're building a profitable as well as a growing business, but we do not want to do that at the expense of our investors. So we maintain very safe as well as stable cash flows. We don't over leverage ourselves because we want to ensure that at the end of the day, our investors are taken care of and that they're happy as well as protected. All right, so as mentioned, our core industry, it's the e-commerce space. This is our target market. We think overall it's a great market to be a part of. One, because of the sheer size of this market. We have seen phenomenal growth in this area in the last few years, and we expect this growth to continue for the next 5+ years. As you've probably noticed, everybody's buying things online with companies like Amazon. It's made the whole process much more efficient, where instead of in the old days, everybody would go out and actually buy everything in person. Nowadays, you can essentially do that with a few clicks just from your computer at home. So it's really changed the game up with this space, and it's made just the whole process quite a bit more efficient. We think one of the really nice things about the e-commerce space is there's room for great margins and a lot of room for us to grow. So we're able to grow this business organically while also receiving healthy profit margins with the business. All right, so typically there are three types of acquisitions that we're making here. So first off is existing Amazon as well as e-commerce stores. So those are existing stores that someone has built from the ground up. There are companies that are already selling products. So we simply acquire that business. We take over administration, and then we get to take part in the cash flows that that company has to offer. Secondly is distribution contracts. So those are contracts that we purchase from a wholesale company, because in many cases, companies don't actually have a direct-to-consumer arm. So what that means is they don't actually sell their products direct to consumer. So what they end up doing is they rely on companies like us to actually bring their product to market. So what we'll do is we'll purchase these distribution contracts in bulk. We'll sell them through our existing e-commerce platform, and then we'll do that through a wide variety of clientele, and we end up taking a margin for actually doing that. And I think a really good example of this could be L'Oreal Paris. It's a company, they sell skincare products, shampoo, conditioner, that type of stuff. But what we'll do is we'll go in, we'll buy those distribution contracts in bulk, and we'll sell to clients. What's nice about L'Oreal Paris, it's a company that lots of people recognize. So the products sell quite a bit each month as well as each year. So it is a really high amount of sales velocity because people really recognize that brand name. And then next up is private label products. So those are products that we actually develop ourselves. So we'll manufacture and distribute these products from start to finish. So we'll go to the manufacturer, we'll tell them we're looking to develop a specific product. It's then going to be manufactured in bulk. And then from there, we market the product ourselves, and then we keep the cash flows from that product. The thing with private label products is typically it does take quite a bit longer because we're involved in that process from start to finish. So it does take longer to actually start generating sales. But the nice thing is we're able to make quite a bit higher margins on private label products. So it's really nice that we have these three different cash flow streams working for us here at Pinon Hill Capital. All right, awesome. So we went over some of the details in terms of what we do on a broad level, but I want to essentially touch upon the economics behind how we do what we do here. So the first step within that process is discovery. So what we're looking for, we want to figure out if these companies that we're looking to acquire, if they have a past level of success. Are they profitable? Do they produce stable cash flows? Because that helps us understand how that company is going to perform in the near future. We also want to find products that are selling that aren't going to go obsolete in the near future. We want it to have some longevity in terms of what they're actually selling. We want to make sure it's going to be a product that's going to continue to sell for the next 5, 10 plus years. Next up, and this one's very important, we want to find products that are selling with a minimum margin of at least 10%. Oftentimes, we are able to find quite a bit higher than that 10%, but that 10% is simply the baseline that we're looking for, because that helps us hit our target rate of return. If margins are much lower than that, then oftentimes companies can run the risk of actually breaking even on those products that we're selling. So by having that guideline in place of that 10%, it ensures that we're constantly making money on the products that we are working with. Next up, we look for a minimum of $25,000 in sales per month. And also, as I was saying with that L'Oreal Paris example, we're looking for high sales velocity. Because even if a company has really high margins, if it's not really selling consistently, then it's not that significant for us. So we want to find companies that are selling at a high volume overall consistently. So, and then once we actually acquire these businesses, there's a couple things we are going to do from there. Once again, we're looking to acquire successful, well-run businesses with a great product. But in many cases with these companies, the owner actually doesn't have the expertise to maximize the full value of that brand. So what we'll do in those situations, we'll come in, we'll inject capital into that business, we'll further expand inventory, we're going to optimize marketing to further increase revenues, and then we're going to leverage our existing e-commerce space presence to lower costs for that company and increase our profit margins overall. So if, for example, we find a business that's selling $50,000 a month, we might be able to bolster that up to $100,000 just in a few months by making some of the changes mentioned previously. And so here's a really good example of just how that would work. So this was one of our recent acquisitions that we recently did here. So it's a company, they're called Jasmine Lamp. So it's a sales price of $20, $18 in total cost, 10% margins on this product. So what we'll do, we'll go to the manufacturer and we'll buy, let's say, 3,000 units of this bedside lamp. We'll sell through those units in a couple of months, and we'll take those revenues received from the sales and we'll recycle it right back into additional inventory, and then we'll do it all over again. So in this example, we're able to take a 10% margin product and we sell through that inventory 4 to 6 times throughout the entire year. So even though it's a 10% margin product, we end up making 40 to 60% rates of return on this investment, because we're able to take that margin product, that 10% margin product, and sell through it multiple times each year. So overall, it ends up leading to a very high net rate of return throughout the course of that year. So as I was saying, because of this high net rate of return, this allows us to pay not only a stable, but also a high return with our offering that we have here today. So there's 2 specific offerings. Both of them are going to be fixed rate options, and they are going to be on a 3-year term. So first up, we have a 10% fixed rate option, and that's going to be paying interest monthly. Secondly, we have a 11% fixed rate compound option, and that's going to be paying out at the end of the term. So it's going to be a lump sum payment at the end of the term. Both of these options, they are secured notes. So that means they are backed by the assets here at Pinon Hill Capital. So it is going to be a first priority position. It's first in the capital stack, so it is considered a low risk investment. And I do want to notate as well, the reason the compound option pays a higher return is because what we're able to do is we can take the capital that we would normally pay back to investors, and we can recycle that capital into further acquisitions. So it's really in our best interest just to pay a little bit of a higher rate, just to incentivize our investors to keep their money in that compound option. But we do know it really depends on you and your goals, and that's really why we have both options. Joe, just feel free to let us know which option you're looking to do. And if you want to do anything where you want to maybe start with the fixed, move to the compound, or anything like that, that is going to be an option as well. So just let us know if you're looking to do that. But both of these options, like I said, they are fixed. So there's never going to be any fluctuation in that balance over that term. All right, next slide here. So as I was saying, this is considered a safe investment. They are secured notes, meaning they are backed by the inventory as well as the assets that we own here at Pinon Hill Capital. It is going to be first in line in the capital stack because we want to ensure at the end of the day that our investors are protected. I did want to include just a brief example of what it would look like. So I just used 100,000 as the amount because typically that's roughly the average that people invest. And then it's a nice even round number. So it's nice for the math there. So by the end of the term with the compound option, you would have 138,887.86. So that includes the accrued interest as well as payback of that principal balance. On the other hand, with the monthly interest option, you would get 833 per month. So that would be 10,000 per year. So total interest would be 30,000. So by the end of the investment term, so by the end of that 3 years, that investment would be worth 130,000. And then I did want to say as well, depending on the size of the investment, we do offer rate lifts. So if you invest over 100,000, you would receive a rate lift of 1%. So for example, if you invest in the compound option, instead of receiving 11%, you would actually get 12%. And then secondly, if you invest over 500,000, there's going to be a 2% rate lift. So same example, instead of 11%, you would end up getting 13%. And then lastly, if you invest over $1 million, give us a call and let us know because we do have a further rate lift if you're looking to invest above that amount. And then if you, for example, maybe put 50,000 in the compound and 50,000 in the monthly option, you can still get that rate lift. It's just about the total amount of the investment. So you'd still be able to get that rate lift if you did, for example, 50 in each. All right, and then I did want to dive into briefly why we actually pay these interest rates. So first off, there's a couple reasons why we chose this offering as opposed to different options for financing. So bank financing, public equity offering, private equity offering, anything like that. So first off, the reason we chose a debt offering as opposed to an equity offering is because we recognize that this company is going to be very profitable, and we believe it's going to grow substantially over the next few years. With that being said, we're not looking to give up a substantial amount of equity to actually achieve our financing goals. We recognize that equity does equal future profits in the business. And with this debt offering, we're able to maintain control as well as ownership with the business. Another typical problem that we notice with most debt offerings is usually companies go through investment banks or third parties, but typically the fee can be anywhere from 2 to 6% of your issuance. So what we're able to do, since we're not paying that 2 to 6%, is we can take those savings and we can pass it on to our investors in the form of a higher yield. So that's the biggest reason why we chose this private issuance, is because we can overall increase that net return to our investors. And then another option lots of companies our size do is bank financing. But one of the biggest difficulties here is there's a lot of hoops that you have to jump through to actually get financing. Also, they take a lot of control. Oftentimes, they put restrictive covenants in terms of what you can actually do. So, for example, if we were to go out and actually get $1 million, even if they give it to us, it could take 2 to 3 months to actually get that money. And then from there, we would have to do that whole process over and over again. So it ends up just being a very inefficient process overall. So we figured this way, just raising capital on our own through webinars, presentations like what we're doing here today, we thought that was just a much more efficient way to achieve our financing goals here at Pinon Hill Capital. All right, so how we pay these rates. So we dived into this a little bit, but we are netting out at 20 to 30% rates of return after all our expenses. So this leaves us plenty of space to pay investors back at that rate of 10 to 11%. And as I was saying, we get to that rate of return by taking products with a minimum margin of at least 10% and then selling through that inventory multiple times each year. So like I was saying before, safety is one of the most important values for us. With that being said, we maintain a 5-to-1 cash flow coverage ratio. So what that means is that for every dollar that we're paying back in interest, we're having $5 coming in the form of operational cash flow. So it makes it so we can easily pay back investors not only their interest, but also their principal payment. Because we recognize it's very important for us to have adequate cash flow numbers because we have these monthly interest obligations. All right, and just to summarize the opportunity that we have here today. So we have the 10% option, and that's paying interest monthly. That's over the course of 3 years. Secondly, we have the compound option paying 11%, and that's over 3 years as well. As I was saying, if you're looking to do any type of combination with the two, that's something you can do as well. So if you want to start with the compound and move to the fixed, that's something you can do. Or if you want to have half your money in one, half your money in the other, that is an option as well. So just let us know if you are looking to do that. This is a $10,000 minimum investment, but other than that, sky is the limit. So you can go as high as you would like. 10,000 is simply the minimum with this investment. And I do want to notate again, this investment, it's not correlated with the stock market or anything like that. The principal value with this investment, it's never going to change or fluctuate. And I would say that's something that most investors find incredibly valuable, is you have a very good idea in terms of what you're actually going to get by the end of the 3 years. And so this is exactly what I was just discussing. This is a chart of the S&P 500 over the last 2 years. So as you can see, it's kind of moving all over the place. A ton of market volatility in the last recent years. And people have a hard time with this. They're looking for options where there's not volatility at this level, especially older investors, because they can't afford to be in a position where it might take 5, maybe 10 years for their asset value to bounce back. So they end up looking for alternatives. They can't really put their money in the bank because typically rates are so low. So they end up looking for a longer term to actually get higher rates. So I think this can be a great option for people who are maybe close to retirement or who are in retirement, because it's still getting them that higher rate and it's only a term of 3 years. So that is just about it, just to summarize everything here. So if you are interested in investing, check out our website. We are at pinionhillcapital.com. It should walk you through all those investment details. But from there, all we would do is we would send you a DocuSign, and that would just go over all the investment details. You can invest if you want to invest through IRA or a non-IRA accounts. That is something you can do. So we would accept pension plans, Roth IRAs, anything like that. We do have third-party IRA custodians, so they can help out with that onboarding. And then if you are doing a non-IRA investment, everything can be done online. So how it would work is we would just send you a DocuSign going through all the investment details. And then simply you can just fund the investment. And you can do that through check just by sending us a check or a wire transfer. If it is a wire transfer, you can just let us know if there's any fees associated with doing so. And then we can reimburse you for any fees associated with making that transfer. You can also do ACH, but with ACH, it only works if it's up to 20,000. So let us know if you want to do that. But overall, it is very simple. Usually it takes about 5-10 minutes. But just let us know if you have questions or anything like that you have with that. So yeah, I did want to have one more slide that just has our phone, email, website. So as I was saying, it is pinionhillcapital.com. And my number, in case you want to talk with me specifically, you can phone me or text me, It is 720-414-2006. So as I was saying, call me or text me at that number anytime if you have more questions or anything like that. But yeah, I think that is about it. I know there have been some questions asked throughout this presentation, so I think we are good to go to jump in the Q&A section.
Yeah, of course. The first question we see here is, what is the investment process and how long does it take?
So typically investment process, it is very simple. Usually takes about 5 to 10 minutes. So we would just send you a DocuSign going over the investment details. And then from there is just funding the investment. So you can do that by sending us a check. You can do that through wire or ACH up to 20,000. So let us know if there are any fees associated with actually making that transfer, and then we can reimburse you for any amount.
And then, are there any fees to getting out early?
Great question. So if you are looking to get out earlier than that 3-year time period, there would be a 8% break fee. If it's some type of emergency, then there wouldn't be a fee associated with doing so.
All right, let's see what else we got here. Is there a maximum someone can invest?
Great question as well. So we are authorized with the SEC to raise a total of 100 million. So as long as it's above 10,000 and not past 100 million, then you're good to go.
And then, can I invest part of the money into the 10% and part into the 11% and still get the rate lifts?
Yes, you can. So it's about the total sum of the investment. So if, for example, you put 50,000 in one option and 50,000 in the other, you would still get that rate lift because it's about the total sum of that investment. So in that scenario, it'd be 100,000, so you would still get that rate lift.
All right. And then, can you invest through any type of retirement account, such as a Roth, SEP IRA, 401ks, etc.?
Yes, so you can utilize any type of retirement account. Just let us know if you are looking to do that. We do have third-party IRA custodians, so they can help out with the onboarding of that investment. But usually it's very simple to actually set that up.
And then, last question I see here is, are there any costs associated with investing through IRA?
So there's no cost, no penalties, taxes, anything like that associated with doing it through an IRA. So as I was saying, we have third-party IRA custodians, and they can help out with that onboarding of the investment. But usually it's very simple, and there wouldn't be a fee associated with doing that.
Awesome. And would you guys be covering the IRA fees?
So there's not a fee associated with going through an IRA, but we would cover any fees if there is some type of fee for that.
Well, Cole, I think those are all the questions that I have here. Is there anything else you wanted to add?
I think that's about it. I really appreciate everybody just taking the time to be here today. As I was saying, if you have any further questions or anything like that, you can always contact us through email or phone or anything like that. We'd be happy to answer any questions you might have.
Awesome. Well, thank you so much, Cole, for your time today. Thank you, everyone who attended the webinar. And if you weren't able to attend, we will be having a recap around it. So be on the lookout for that. Hope everyone has a great Friday and a great weekend. Bye, everyone.